Hey guys, how is it going? So it is now Friday, October 27th, and with big anticipation for the Q4 news from OmiseGo, we are expecting some sort of roadmap that will detail the wallet SDK and their exchange information as well. So I'd like to do a quick overview on an OmiseGo analysis from an Elliot Wave theory perspective. Now, let's first of all draw some very clear support and resistance lines. It's very important for us to distinguish between the proper support lines and the wrong ones, all right? So we're going to choose 2 points here first, where it began, discounting the wicks, all right? So we're only going to include where the body ends right here. And that's the proper way to draw it, because the ones that poke out, it means that it attempts to break the resistance, but it doesn't quite break it. Now, that is basically the wave 2 that has formed, and this is the wave 1 that has formed. And we're just going to do a quick label of it for you as well. 1, and we'll call this just 2. Now, what kind of wave structure are we seeing in here? I know it can look like a hot mess to a lot of people, but this is actually what it is. It's an A, B, C, D, E corrective pattern. You know what, I can probably draw this a little bit better. There you go. This is going to look a lot better now. So let's get our A, B, C, D corrective pattern in here, and we're going to use the same theory as well, where we're only going to draw it to the body. Okay, so we have 5 waves coming down here. We don't see it because it's on a higher time frame, but trust me, it's there. This is the ABC here, and this is right there. See, notice how symmetrical it is, right? Looks pretty good like that, doesn't it? Now that we have that A, B, C, D, E, it's basically a falling wedge. And you guys know how I feel about falling wedges. They are bullish, okay? They're bullish in every way. So notice how we have this perfect falling wedge here. This is not a symmetric triangle, okay guys? This is not a descending triangle as well either. This is a falling wedge. That is the exact definition of it. There's basically a lack of supply and demand balance, and then when it reaches near the end here, or point E specifically, it ends up breaking up to the upside. This whole structure right here, A, B, C, D to E, it is a corrective pattern for wave 2 here. Okay, that makes sense? That's what it is. So we're going to call this wave 2. Now, how do we know that we're correct? Okay, we're going to zoom in to a different time frame, such as 1 hour. And this is how we know we're pretty much bang on. Okay, we're going to just move this a little bit right here. And I'm just actually going to zoom out a little bit to let you guys see it as well. So let's say I went to the daily. How does it look still? Looks pretty good, right? Everything here looks pretty good. The lines are still connected very nicely. The points make sense. But what I'm trying to get to is this this area right here, this line, you guys recognize in a higher time frame, right? When we zoom out, it connects points B and D, right? This was a resistance. But what does a resistance become once it gets broken, guys? It becomes a support, right? And that is why we are hovering right now just slightly above the support. It's touching it and it's trying to break through, but it doesn't really quite break through. So if we're combining our daily chart right here with all the points confirming where the falling wedge is, and then if we go to a lower time frame as well, that is how we're drawing our resistance that has now become a support. Now, what of this? Now, where is another secondary support area, guys? So we're going to take the last points from here, okay, just like this, and we're going to draw it across. Let's confirm it on a different time frame to see how it looks. Looks all right. I can dig that, but I prefer it on a 1 hour time frame because it gives us a really accurate picture. Sometimes we want to count the wick, sometimes we don't want to count the wick. But this to me right here, it's pretty darn good good support and resistance area. Don't you guys think? See, notice how it is making a double bottom here. Here, let me highlight this for you guys. Just trying to find my brush feature. There you go. You know how this area here, it has like a brush, but it has all shapes? I think the brush should be moved down to where the text is. Doesn't that make more sense? Or the brush should be moved to where the line is. It doesn't make sense to me at all how brush is with shapes. Anyways, a little criticism towards TradingView. So look at this, guys. As it approaches this apex area, what an apex area is a key area that intersects, right? It's 2 points that intersect, 2 key points that intersect. See, notice right here, we have one bottom, and notice here we have a second bottom, okay? Now that is a very, very strong support right there because of 3 reasons. 1, it created a double bottom. 2, it is staying above the old resistance area, which is now a support. And 3, it is also staying above this third or second support area, I mean. So once again, double bottom, it is still staying in the bullish zone above the previous resistance. And 3, it's also hovering above where we drew this resistance right there, okay? So when we zoom out like that, it makes a lot more sense. Then let's say we go on a 4-hour chart. It makes even more sense, doesn't it, guys? See, look how we're drawing it on a 4-hour chart, the support right here. It's pretty beautiful, isn't it? And if you look on a 4-hour chart, right now what we have, where did the time go? That's very odd. My timer disappeared. Usually there's one right there, it's my countdown. Huh. Anyways, yeah, we see a double support here. Every time it tries to breach through it, it's being rejected by the bulls, and the bulls are pushing it back up, right? These long wicks are actually a really good indication. It shows that every time, once again, that it tries to push down, it gets constantly rejected by the bulls. And it's because of this key area right here, right now, that's preventing it from going down. It's pretty cool support, right? So now that we are officially done, our wave 1 going up, our wave 2 coming down, and we've identified some clear resistance and supports, what happens next? Well, right now, we're figuring out what to do here right now. And that's a pretty important part. And we can break it down even further, okay? We're going to go into, for example, a 30-minute chart right now. So what do we have here going on? There's a lot of information. We're going to draw some Elliot Wave structures because, like I mentioned, we're going to be analyzing this from an Elliot Wave perspective because I am an Elliot Wave trader. That is no doubt about it. So let's take our first point here, come to our second point here, third point here, fourth point there, and this is our fifth point right there, okay? Now, why does it have this ugly thing going on? Well, this ugly thing going on right here is an ending diagonal. Ending diagonals can happen. Whoops. They're pretty common. You're never going to get a wave structure that looks perfect, right? Like a perfect zigzag, 5 waves up kind of pattern. You're going to end up getting more patterns like this than anything. See, notice that this ends up being a wedge shape, and these rising wedges are actually, they look like they want to go up, but because they're getting smaller and smaller like this, we end up calling it a rising wedge, which is bullish. So once it forms this pattern right here, it's going to tank. And you can actually count it as well, right? Now, why did I skip this one right here? Because it didn't quite touch this line here in terms of body, because it has the structure of A, B, C coming down. We don't see it right here because it's so far zoomed out, but let me show you what it actually looks like when we zoom out, okay? So this is the characteristic of it. We have 1, 2, 3, and then we have 1, 2, 3, 4, 5, and then we have 1, 2, 3 coming down. And that's why I didn't include it. Now, how do we label this guy? Actually, you know what? I'm gonna make it really different for you guys. I don't want to spend a lot of time labeling it because that'll take forever to do. So I'm just gonna make it a little bit ugly. You guys get the idea of where this 5 is, right? I'll just assume you get the idea. And we're just gonna use 1, 2, 3, 4, 5 in here. 1, 2, 3, 4, and 5, okay? And we're just gonna make it a different color for you to see. We'll call it subminuet 1, sure. You guys get that, right? Here's 1, 2, 3, 4, 5, and this is an ending diagonal within the fourth wave, where the fourth one starts right here and it ends there. So now we've confirmed that this is now wave 1 because it has the substructure for all waves. There you go. Here's wave 1, we'll call it. So using Elliot Wave, it does take a little bit of time to do, definitely. Now what we want to figure out is, this is a complicated one. I've been looking at it for a few hours now, and I still can't really figure it out, but let me share with you what I have for now, okay? We're just going to assume that this is all of wave 2, the corrective phase. Now, let me tell you some characteristics on wave 2, the corrective wave. What can happen is it could actually retrace all the way up to about this point right here. If it retraces below where it started, then we'll end up getting a reversal. But when we think of all the hype surrounding the news right now and the Q4 expectations from OmiseGo, we look at the team behind it, right? We don't invest in just the coin or the value of the coin, and we don't speculate on that. We also do fundamental analysis, and we factor in things such as, how is the team, right? How is the team? Are they a promising team? Do they have experience under their belt? Are they delivering what they're promising? Basically, are they not idiots? And the answer is, they're a great team. I follow quite a bit of coins, or just to keep up to them, and I can guarantee you that OmiseGo has a foundation for success. It's one of those coins that I do firmly believe that in a few months' time, it's going to be really heard of. And what they're doing for business to business, for merchant to business, by trying to revolutionize and penetrate the financial technology industry, it's pretty cool what they're doing right now, and all their partnerships as well that they have behind the scenes that we're going to hear about really soon. It's one of the, or some of the reasons why I'm heavily invested in this coin. And I'll tell you guys that I believed in Ethereum. I will show you guys my article if you guys don't believe me, okay? Check this out, guys. I had a hunch about Ethereum, and I wrote this article, which now has 200,000 views, okay? I wrote this article in March of 2016. Now, how much was Ethereum, guys, back in March of 2016, okay? We're gonna look at it really quickly together so you guys will understand why I'm speculative. Sure, we'll go to Poloniex. Okay. Weird. FUSD. What is going on? Huh. That's weird. We'll go to Bittrex instead then. Okay, here we go. Alrighty. So in March of 2016, I wrote this article. Okay, so you guys see it right here. I wrote it on what day? on, doesn't really matter, March 23rd, okay? And I'm going to tell you guys what I wrote. This, once again, it has about 150 to 200,000 views, and I wrote an article to get people to mine because I firmly believed in it. And I'm going to tell you guys what I wrote about Ethereum. My advice to everyone, and this is March 2016, keep in mind, you have a small chance to win if you play your cards right, to get filthy rich. For example, there was one year where $100 of Litecoin, after a year, it became 30 grand. Now, what you do with your Ether is up to you. You can hoard it and hope. It will. Trust me, it will go up so friggin' much it's going to blow your face away. You can sell it right now and use the extra capital for trading crypto if you want. The choice is yours. Just remember that Ethereum is huge. This is the biggest thing to happen on the internet in the longest time. How much you believe in Ethereum versus how much time you can afford to wait will determine what you do. I'm not rich by any means. I don't have thousands of dollars to spend on rigs or thousands of dollars to hoard as much Ether as I can. But what I do have is a lot of faith. So what will you do, or what will 100 or 200 Ether mined 3 to 4 years mean from now? Ask yourself that. If you don't know, check out the history of popular coins like Bitcoin and Litecoin. Check out how much they skyrocketed in price. Read the success stories of 20-year-olds who spent $200 on Bitcoin and they're now millionaires. So this was written in March 2016, gentlemen. Okay, let's try and give you guys some perspective. I wrote it right around here when it was $10 still, okay? Do you guys get what I'm saying? I believed in Ethereum so much, and now I don't work. Do you guys get what I'm saying? And we saw what happened to the price in Ethereum. And this right here is the day that I got to quit my job forever because I sold it around $350. That is how much I believe in Ethereum. So, or did believe in Ethereum. And now I'm heavily invested in OmiseGo because I had that same hunch, you know, that same hunch. I've been trading OmiseGo since it was literally like 50 cents, guys. I got on that bandwagon. I had a lot of Ethereum, got some airdrops. It was amazing. And I've been trading it since really early August, and I made a shit ton of money doing it. And now I'm in a position where I'm adding to my portfolio long term. And I'm very excited about what is to come. So that is why I'm heavily invested in OmiseGo, guys. I trusted my gut the first time, and I'm going to trust it again because I was right the first time. And I do extensive research on OmiseGo. A lot of my time is spent doing research for it, figuring out what is going on, checking out the developers, trying to find out insider news, reading Reddit, getting a general vibe of market sentiment as well. And people will ask, hey, why aren't I looking at other coins right now? It's because it's not worth my time right now. What's worth my time is OmiseGo. So yeah, that makes sense, I hope. So anyways, back to our Elliot Wave analysis. Okay, we're going to assume that this is wave 2 right here, okay? Now, this is a very complicated wave structure, would you guys agree? And we have to dissect it even further, all right? We have to see, so if it was in a corrective, for example, A, B, C pattern, it would have the first wave down, it would have 5 legs roughly. Do we have 5 legs? Yeah, we do have 5 legs right here, okay? 1, 2. Yeah, we can say that right here. Okay, so this is the first wave coming down. Notice how for this one it had 1, 2, 3, 4, and then the diagonal here. Well, for this one, it'll have a very similar structure as well. So let's draw it in here. So this is now wave 1 that finished right here. Or sorry, the first one called A, all right? We'll call it A. Rarely are corrective waves that precise. But this one just happens to be a perfectly symmetrical one, right? Wouldn't you guys agree? Look how symmetrical everything is. I mean, the way it's downtrending, it's a beautiful, beautiful one. Like, what can I say? If I moved it to over here, for example, instead of this one, it looks even better, right? I mean, look at the angle. This one coming down versus this one right here. Perfect, right? Now, where is B? And I said that there would be an ABC, right? Well, ABC, when we go up, we'll have, when we have B coming up here, instead of having 5 waves coming down, we actually get 3 waves going up. So I'm going to draw it in here for you guys, like this. So we can say this is B right here, because it follows this structure of, right? Do you guys see this? That. So can we confirm that this is B? Yeah, let's confirm that this is B right here. All right, is this making sense so far, guys? I mean, this one here is actually a pretty nice chart to be analyzing. And I combine fundamental analysis as much as I combine technical analysis. I firmly believe that we should be looking at both factors always. Now, for this one is a little bit complicated. It fell a little bit short. Here's when Bitcoin had a small rally there, so every coin ended up dipping. So we're going to draw this one in here as our wave C. Okay, so what ended up happening here was it got something called basically a truncated fifth, where you can call it a double bottom, right? You can call it double bottom. In normal cases, it could have just gone up like that. But because people are on the fence right now about the news coming up, well, they're skeptical about the price. One rule to always follow is you buy the news, okay? Or sorry, you buy the hype and you sell the news. Now, I bought mine, if you guys have been following me on Twitter, like around 7 to 7:15 to 7:25 about here. And I literally sold mine. I sold mine right here about 8:56. And I didn't actually short it on the way down at all because I didn't want to take the risk. And you know what? It's a bull market right now for OmiseGo. So I'm not going to take the chance at all and short it, just in case something fishy comes up that's really out of our control, despite it needing a correction. Now, I knew it needed a correction just based on how high the RSI was on every single chart. For example, if we went on the 2-hour RSI at that time, it was basically peaking right here, right, already. So if we looked on the 30-minute RSI, it was really, really high as well. Everything was just peaking to the well 80s. But what gave us a strong signal was probably a higher time frame one, like around here. Because this one here, as soon as this one formed, okay guys? Or sorry, I'm looking at the wrong one entirely, geez. It's over here. It just couldn't really break any higher than that. And we look on the 2-hour chart, right? I knew it was going to come down here because it was getting a series of lower lows, but I remember what confirmed it for me was this guy right here. After it reaches here, now a wedge, right, or a rising ending diagonal like this, how do you know it's going to tank? Well, what professional traders do is they look at the RSI as well, okay, and they just draw a line like that, okay, at the peak points. See, here's one peak point, right, where it lines with this, with wave 3 coming up. Here's a second peak point about. This one can probably be drawn a little differently. Right here, it lines with this peak point, and here's a third one. This can probably be drawn one over it as well, like that, okay? So we have 3, 4 actually. Well, this one here didn't quite reach it, and when we see this diverging line like this is a bearish divergence, okay? And also we see, even though it's going up right here, okay, even though it's going up, we look at the MACD and we know that it's actually coming down. The blue one, there's 2 of them, right? There's a 12 and a 26. The 26 is the red one, the blue one is the 12. And just based on that one, where it just couldn't get a series of higher highs, you know it was going to come down. So the right thing to have been doing was to short it. But I thought that it might only retrace a tiny bit and just basically have another massive run up, because usually I thought it was going to end right here about, but it actually ended up going into the bearish zone. Now, what is a bearish zone? Okay, a bearish zone is RSI basically between, I like to say between 60 and under. usually around here, we'll say. So this was the two bearish zones, if you guys notice, okay? That's not the line that I want. You guys see what I'm talking about here? Right? It kind of hovers in this area, in this line. It's not that visible. I'm sorry, guys. It's probably a lot better now, right? Okay. It kind of hovers around this line from here. I'm just going to highlight it for you. That's going to be a lot easier. Basically, this range right here, all the way to here. But then it finally ended up going here. So what happened there? That's a pretty crucial moment. Actually, what happened from right here to right here? These are important points. This is where your A, B, C correction ended. And normally it would just actually go upwards, right? So it could have had a chance to go up like here. Just straight up and break, because the ABC corrective pattern was officially finished from what we saw. I mean, we can also draw it in here as well. Usually this one would be a lot stronger in length. It would actually be like a 1-to-1 ratio. Should have been about here, but it was very weak instead. And the reason for that is because of all the hype surrounding the Q4 news, right? So one would have expected to just break out. And if you guys remember from my analysis, I actually played a position from here as well. So I played a position because I knew, based on wave counting, that it was going to be a perfect opportunity to go long. So I had an amazing risk-reward ratio here, where I set my stop, or mental stop. Never do a hard stop, guys, like where you actually put in the order book, unless you know you're going to be away. Always do a mental one and micromanage it. So I took a risk reward of something like that, right? I was just shooting for a higher high than this one, just to be conservative. And I think I had profited about 4% on a few thousand OmiseGo coins. So it was definitely worth my trade there. So this one, I remember taking 28-cent profit on each one. I'll have to check back on my Twitter. Maybe 30-cent profit on a few thousand. So it was a few good hundred that I made from it. So this risk reward ratio was 5.48. Once again, stop was set slightly lower than here. This whole ABC correction was done. So there's no way you would have not taken the chance, right? So here's the ABC correction finishing. Right? You guys see this? There you go. So it finishes that wave structure just like that. That is 1, 2, 3, 4, 5, which makes A, 1, 2, 3, which makes, or ABC, which makes B, then 1, 2, 3, 4, 5, which makes C. Cool. So now we've got this hot freaking mess here, right? Where do we go from here? Well, it's basically making a triple extended, like a triple extended wave with W, X, and Y correction. So we're going to draw in even more waves here to try to figure out this hot mess. So we're going to draw one to here, okay? We're going to draw one to here. We're going to draw one to here, and we're going to draw one to right here about. So now we have how many waves, guys? Count with me. We have 1, 2, 3, 4, 5, 6, and 7, okay? This is what we call an extended correction. Instead of having just A, B, and C, we're now adding new stuff to the mix. The new mix is this. I'm going to draw this guy in manually instead. So now we have W. Whoops. We have W. And we have X. And we have Y. Okay? W, X, Y. That is what it is. Now, what is a WXY? Once again, it's basically an extended correction, right? And now we're going to have even more letters in here when we draw it. So this is your new A, pretty much. A, B, whoops, B, and this is now C again. Now, a wave could correct up to 3 times. So we're now only on basically the second one, okay? We're only on the second correction. There could be a possible third one. If there isn't a third one, so if there was a third one, for example, what would it look like? We're gonna change the colors so you guys get a really good idea. And we're gonna play out all the possible scenarios so we can plan for a good entry. This is actually a good entry right here at 740. Very, very good entry because it could make another WXY correction. But because it meets right here, as we've discussed, where this old resistance is now the new support, and because we're taking this really strong support down the bottom here, and because this is the apex point of where it met, well, you guys have to take that trade. It'd be silly not to. I'm currently in a trade for it, entered at about 750. I'm hoping for it to get to at least 775. If not, it'll probably be higher, I'm guessing, as well. So let's assume, though, this is wave 2 finishing, okay? Oh, that's not Z, that's Y. I just watched the movie called World War Z. That's why I'm thinking of it right now. So do you guys get what I mean by this is the WXY pattern? Okay, I hope you do. The W starts where the C ended, and then the Y goes up here, and between X and Y, we have another A, B, C correction right here. So notice that if we zoom in close, I might have picked some up between 740 as well, maybe 742. Yeah, because I noticed this area. Anyways, I'm just thinking of my position. We'll get into that on Twitter. You guys will see it as I always talk about. So let's assume that this is now wave 2 that finished, and also this is a double zigzag pattern here, right? Or an extended, pretty much a double zigzag. That's what it's called. So we have our A, B, C, and we have our W, X, and we have our Y. Okay, that's how we draw these patterns right here, and that's how we know, right here in this area that I highlighted was basically from A to B right here, or sorry, A to C. And if we look at W to W, X, and Y, we have a new zone, which is about right here. That's where the RSI zone now changed to, okay? See, do you guys notice this? So now the RSI zone changed to about right here. So now we're trying to test to see if we can get a higher high. See, do you guys see what I mean? So before we had a different bearish RSI zone, but now we have a completely different zone as well, which is pretty much between 33 and 60, which is still in the bearish zone. So we have to break out of, around to be in a bullish area. For example, from here to here, we have to break at least 75, 80, I'd say. So this is definitely a correction phase right now where we're not breaking any ridiculous high RSIs. Once we break, maybe for just an example here, okay guys, this is an uptrend. We're getting to high 80s. So let's assume for one moment that now our wave 1 is finished and our wave 2 is corrected. We're going to see how much it retraces. I already know it retraces between 0.6 and 786, or 618 and 786. So there you go, right? You guys see the retracement? We're going to make a little bit more room here. You see the retracement, right? It came down to, it's bouncing off of 786 about, which is fine. And I mentioned the rule before, that wave 2 could retrace all the way to the point of where wave 1 ended. If it surpasses the 1-to-1 ratio, which is this point right here, then it's actually going to reverse back to one of the daily support trend lines, or sorry, the daily support lines there. But it didn't. It's hovering between 786. Ideally, during a strong impulse move, it wouldn't even retrace back far at all. Maybe between 382 and maybe 618. But because it did already, hey, whatever, we accept the fact that it created a double bottom here, which I didn't even mention yet as well, did I? I can't remember, there's been a lot of talk. Yes, I did. So there's one bottom, and here's a second bottom right here, okay? So that's a good indication that we are on a slight uptrend right now. Now that we know it retraced about 786, let's take a look at some short-term targets for here, assuming that this XYZ pattern, or sorry, WXY pattern is now finished. We're going to use a tool on the left here. So click on that tiny little arrow next to this feature. You guys see it? And we're going to go down to trend-based fib extension. We click on this point where it started, so the low point. We click on the second point where it ended, right here. And then we click on the third point where the next low was, right around here. I always go, I don't include the body, I go from wick to wick always. So great. What is a common target? Well, first of all, let's go back, okay guys, to see our impulse move up, the first one. We're going to go 1 hour. We're going to zoom super far out, okay? And we're going to go to right to where the first one began. We're going to not count that one. We're going to look at this one. First, let's see how much movement this one got right here. Just generally speaking. Okay, you guys are following why I'm doing this, right? I'm doing this because we're trying to compare the uptrends here, and we're trying to get an idea of how these wave structures are. Okay, makes sense? So most of these ones, you know what, I'm just going to skip it and I'll tell you guys. Most of them retraced anywhere between 0.5 and 786. So we can use that as a really good gauge, and that's exactly what happened here as well. And most of them hit between a target of 1 and 168. So since we drew our fib extension in there already, we're actually going to go all the way up to here and see where our first targets are. Here's 1-to-1 ratio. And look, here's another one at $10.09. Do you guys see where I'm getting this at? So we took Fibonacci extension again. So basically our first target we're going to shoot for in the very, very short term is this box right here. And that's important to understand these targets. These targets are not random targets. They're targets generated specifically by Fibonacci extensions. So we're just going to draw a box there. We're going to also put another box up here for our second target, okay? This one's very likely to hit as well. You guys want to see how accurate these are? Let me show you, just as an example. Okay, we're going to go here first, for example, and we're going to count the waves. I can't remember how I counted this one. That's 3, I know that. 4, 5. So 1, 2, 3, 4, 5. Yeah, we'll start here. There. This one goes up to here. And 4, and we'll say that one's 5, okay? So actually, you know, 1, 2, 3, 4, 5. Okay, we're going to take this point right here. It seems like an easy one to read. We're going to first of all count the wave that we all see. 1, 2, 3, 4, and 5, okay? Just count that one there for an example. Just as an example, let's say we took our Fibonacci extension where we took this point, and this point right here. Is that kind of magic how it was targeting 1.618 and it pretty much hit it? And then right after it hit it, it was struggling to get higher than it, and it fell back down to the 1 level. And then after that, it tried to shoot for the 2.618 level, but it just couldn't do it, right? So these are ideas, just small ideas of how we can use trend-based Fibonacci extensions to target specific areas. So the first target here, right? Notice how it just flew right by the 1-to-1 ratio area, tried to come back down, but it bounced off of it. And then it went to 1.618 once again, and then it came back right here to the 1 area, and then it bounced off of it. It kind of struggled right around the 1.68 area again, and then it just flew up right here to around 6.18. So that's how powerful some of these tools are. now that we know what has happened in the past, we can make slight predictions to what can happen in the future. And if that was one target right here, and this is our second target right here, and we can actually assume that it could possibly hit this one as well up here. Does that make sense, guys? If the one that I just recently showed you hit it, well, it pretty much hit here, and then it made its way up to 618. Why wouldn't it be possible for these ones to do this as well, right? So I'm just going to clone this line here. Oops. You know what? Let's just draw it normally. I need to get this line to get the angle. I'm just going to delete it for now. Clone. Alrighty. And then we'll draw it back in here so we all see it. When you draw it, it doesn't need to be exactly on it. It just needs to be on the same x-axis, or sorry, y-axis. So just make sure you're that it's parallel to it, okay? Like it's basically right on the same line. Here I can draw it anywhere I want as well. I can even draw it here, but I like to stretch it out just to make sure it's more visible. So assuming the same wave structure, okay, I basically just cloned this uptrend there. So the first target we can easily say is right around here, just based on the same strength as the first one, but the wave 3 is usually much longer. So that's one possibility right there. You guys know what a second possibility is? Second possibility is right around here. Okay, following so far? And our third possibility, let's just draw this and stretch it out a little bit so we see it better. And our third possibility, and here let's just draw our boxes. Whoops. That's our second possibility. And our third possibility is all the way up here. And you guys have seen my tweets where I'm looking for setups, right? Or I'm tweeting 12 hours before it actually happens. What I'm doing is pretty much this thought process right here. I'm rationalizing all the potential plays and I'm looking to evaluate the best one. I'm looking to find the highest probability trade always, okay? When you take high probability trades, it's really good because it minimizes the risk, okay? So let's say when we factor in everything that I've been talking about, which is your double bottom here, one bounce off of this strong support line, and a bounce from the main resistance line, even on the daily chart. We're talking about this big ass motherfucker right there. It's 3 good reasons, isn't it, to why it's a strong support. Can you guys give me a reason why it's going to go down? I can't. For it to go down, it's going to have to break this double bottom that we see already. It's going to have to break this dragonfly doji that we see already right now on a 4-hour, which is really powerful. It's just crazy. It's got so many things it needs to break. So it's got to break the doji. It's got to break this main resistance line. It's got to break this main support line. So why would you not take a chance to go long here? I'm not trying to give financial advice to anyone. I'm just talking about how and why I went into it, and I got to rationalize my thought out loud, right? So I can't think of more reasons to not go into it than to think of reasons to go into it. And that's what a trader does. He looks at the probability of plays. We treat it as mathematical statements, like if and only this, then that. And we know for a fact that it's a good play just by analyzing all of this. So let's say we went in at 750. Sure, there's a chance right now as well that it's going to do another WXYZ correction to, instead of make a 7-wave structure, you know, there's a lot more waves to it. It's a possibility, but we have to make sure that we take high probability setups and low risk setups. And right now, this is a really low risk setup. We're not guaranteed that it's going to go up right now. All we're doing is just speculating. I completely drew this off over here. All we're doing is just speculating on the fact that it may go up. Okay, that's important to understand. You don't always want to just buy into strength as it goes up. That is a horrible thing to do. Waiting for something to go up, like for breakout, and then buy into it sometimes. What I like to do a lot better is buy it right here instead of wait for the strength to go up, because I'm making an assumption, and I'm always assuming things like this where, hey, it's probably not going to go down more, we're going to go up from here, there's a lot of strong supports, it made a double bottom, let's take this trade. Now, if anyone were to take this trade, and you guys have to understand that I'm not giving financial advice once again, I'm just talking about why I would go into it. You guys might have read my blog post about followers, right? Never ever fucking follow. Don't ever ask someone, when should I buy, what should I buy, and when should I sell it? These are the kind of questions that sets people up for failure, and you guys know how I personally feel about that. I want to make sure I help people. I want to make sure that people are starting off on the right foot always, and they're being taught properly, rather than blindly following someone by paying for a random, signal servers and shit like that. Do not fall for those scams. We must learn how to independently think for ourselves so we can make these kind of decisions that I'm trying to talk to you through right now. Okay? Anyways, enough preaching. I'm sorry, gentlemen. It's been a long time since I made a video. I've been really, really, really busy just trading in general. And I miss making videos, actually. It's fun talking to myself all the time. Actually, I'm not talking to myself. It really does feel like I'm talking to you guys. And I've gotten to know a lot of my viewers throughout social media. And you guys are actually awesome. It's pretty cool talking to you guys. You guys find little mistakes that I make and correct me, and we share opinions and ideas, and then we formulate a consensus. So what risk setup is this right here? Click on this little tool, the arrow, make sure you're on the long position, right? We are going to set our stop loss where? Probably slightly right below it, because we've, this is one resistance or support, this is another one, and a double bottom. So sure, we can just set it. Let's go swing low. So swing low just basically means, we're going to, the next lower one, let's just say that. So I'm going to just go say $7. Why not? My risk level will be $7, okay? I'm cool to take that kind of pain, and I will wait, and I will hold, because that is exactly my tolerance level for this trade. I don't think it's going to go back to $7, so I'm going to take that trade, and I'm going to risk, first of all, going for target 1 right here. Basically, what this means is I'm going to buy it here at 740-ish, we'll say, 750 even, okay, we'll go higher. And I will not cut my position. I will not cut my position, no fucking matter what, unless it falls below, say, okay, we'll say 720, okay? 720, because it hasn't gone through 720 in a pretty long time with the news coming up. Hell no, it's going to do it. Now, where's my target? My target is at least to target 1-to-1 right here. I can go even higher. I can even go higher if I want to make my target. But usually what I like to do is I like to reduce my risk, and I'll basically buy where it hits my target, and then if it bounces back to a fib level, and I know it's on an uptrend, it's very bullish market sentiment, then I'll buy back on the dip. Why would you do that? Because one, you're reducing your risk, okay? How do you reduce your risk? Well, you're taking in profit and you're not in a position anymore. Simple as that. So you take your profit at the top to reduce your risk. Now, one would argue, why wouldn't you just try to ride it up to here? And the argument to that, once again, is to reduce your fucking risk, okay? You don't know if it's going to go up here. You don't know. What you want to do is lock in your freaking profits when it's very near the top already, okay? You want to basically, it's a way of hedging. It's a way of ensuring against you if something goes bad. Now, you don't have to sell all of your coins. What you can do is you can, a form of risk reduction is to sell some of your coins, maybe lock in half of your profits if you believe that they're still very bearish. This way you're reducing some of your risk, and your base price might have increased a little bit, right, for that particular one. But let's say you ended up retracing down here and you bought more. Well, it averages out your price for everything, right? So even though you bought it higher, it averages it out to maybe right in between to where you bought it. And that's just a simple way to reduce risk amongst so many other out there. So if you guys don't focus on stop losses and focus on risk management, definitely check it out, okay? Before jumping into complicated shit that I'm talking about, like Elliot Wave, or following my videos of scalping, for example, turning the $200 to $1,600 in 16 days, don't follow them. Like, honestly, guys, I have to be really honest. It's not an easy strategy to do what I do in the videos. There's a lot of mental calculations in my head that I perform that has to do with probability and liquidity and just checking out volume and stuff. And there's a lot of behind the scenes things that you guys don't see going on or that I even talk about. Okay? And I want to be really honest that it's a fairly intermediate to advanced strategy that I'm using for the scalping. And you don't want to follow it. It's just to give you guys insight on what a trader goes through, right? And those are fairly, I guess to me, they're more basic strategies, but it's kind of a taste. I'm giving beginners a taste of a more intermediate strategy to them, I suppose, right? So anyways, let's say I did enter, which I did, but let's say you guys rather entered a trade at 750. I meant to say, well, look at it go up already. It's already at 754, right? And you want to target this area right here. You don't know if it's going to hit it, but it's a good risk to reward. Now, how do we calculate? See this risk reward, 5.01? What does that mean? What this means is for every OmiseGo coin, right, I have the potential to gain $1.54 per OmiseGo coin if it hits my target. But my stop loss, or my risk rather, is I have a chance to lose 30 cents right here. How is this divided? Simple. You take the price difference in the green area divided by the price difference in the red area. So you're taking $9.05 minus $7.50, whatever that comes out to, and then you divide it by the difference between 750 and the lower area here is 720. So it's pretty simple, right? That's how risk to reward is calculated. Now, is this a really good risk to reward ratio? Hell yeah, it is, guys. This is a freaking fantastic risk to reward 5-0. So you'd almost be silly not to take it, right? Now, what's some of the worst case scenarios that can happen? Worst case scenario is that it actually ends up forming another WXY, where we call it a triple zigzag. Let me see if I can pull it up for you guys here. XYZ correction. So, there's a lot of examples, right? For example, here we have WXY, and now we have WXY, right? And then we can have basically WXYZ to have how many? Count with me. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? So ABC has 3, WXY has 7, WXYZ has 11, okay? So we're going from a 3-wave substructure to a 7 to an 11. You're adding 4 onto each one. Now, if that happens, worst case scenario is it's just going to look like this. W. Got to get a better color here. Well, sure, we'll go with this one here. I'll make it really thick. We can just have another correction like that. You guys get what I'm saying? Whoops. It can look something like that. Might be, I don't know, might get to $8, might not. Seems like it's getting smaller and smaller, right? It can look something like that. Make sense to you guys? Okay. Actually, it wouldn't look like that. This one is completely messed up. It would look like this. It would look something like Do you guys get what I'm saying? So we have there, and then we have something, maybe something like that, and then we could just even come down right over here. Actually, realistically, I'm just thinking about this major support line and how it's not likely. So this is actually a very likely case. I'm just going to go over it with you guys. So we could get something like that just to get extended. Now, this is your new one, okay? This is a triple extension or a triple ending, whatever you want to call it, a triple Elliot zigzag. What do they call it? They call it a Elliot Wave triple combo wave, okay? Yeah, Elliot Wave triple combo. So when we count it, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 waves, okay? And then we are officially now done. So the worst case scenario is, big whoop did you do? I might just get right to here. My risk reward is still 1.45 to 1. So is it still a pretty decent trade? Yeah, absolutely it is. So it's kind of a win-win right now for me. And this is a kind of rationalization techniques that I use while trading. And if you guys just keep focusing on, don't focus on, shit like Elliot Wave, guys. Don't focus on, patterns and stuff like that all the time and whatever, cup and handle, head and shoulder, wedges, falling wedges, rising wedges, descending triangles, whatever, you name it, harmonic patterns, none of that crap. You guys fucking focus on risk management. And I mean it, risk management, how to reduce risk, how to shed risk, how to evaluate risk, how to take high probability trades. These are the formulas to make a successful trader. You do not want to focus on the mediocre things, okay? You got to learn how to walk before you can run. You have to. And trust me, learning how to read patterns and shit like that, it is not walking first, okay? No matter what anyone says, you do not want to develop bad habits first. Bad habits are horrible to break. You guys need to learn risk management. You guys have noticed in my tweets, all that I focus on is tweeting really high probability trades. What do I do first? I look for setups, okay? I look for setups, what makes sense to enter a trade. And then after I have confirmed some sort of trend or a resistance or support, I have targets well before I enter the trade. And once you have these targets, you know exactly what kind of stop loss, what you're risking to lose. And that's important to understand, that before going into a trade, you need to know 3 things. 1, your target. 2, what you're willing to lose on the trade if it goes badly. And 3, right, how much money you're going to make as well. And once you know all of these things, it combines your risk to reward, or it formulates your risk to reward. And then you decide from there if it's worth your money to risk it. Okay, guys? So that's what we do. We take our money and then we ask ourselves, is it worth the risk right now? I'm risking $3, or sorry, 30 cents, we'll say, to make $1.55 at most. And in the least case, if it ends up correcting again, I'm risking 30 cents to make, say, 45 cents. Is that worth it? Yeah, to me it's worth it. But if it was like this, for example, 0.3, where I'm risking 30 cents just to make 10 cents, and then my risk to reward is, see here, 0.33, is that worth it to you guys? I mean, if you guys had $1, okay, and someone said to you, hey man, you want to gamble this right now? You can make 10 cents on your dollar. But if you lose, you're going to lose 50 cents. It's not really worth it to think about it like that, right? Like, there's no way a person's going to be, yeah, I'm going to take that risk. But let's say you're flipping a coin, okay, guys, and the guy says to you, hey, well, let's flip a coin right now, right? We're going to bet like $1 on the line here, okay? You put in a loonie, and if I win, if you're wrong, you owe me 50 cents. But if you're right, I'll give you 50 cents. So you have a chance to lose 50 cents just by flipping a coin. and then you also have a chance to, sorry, to win and to lose 50 cents. Is that worth it to you guys? That's a 1-to-1 ratio, right? Yeah, it's a pretty good chance. Most people would take it. Now, let's say the guy said to you, hey dude, let's flip a coin heads or tails. Now, if you lose, you owe me 50 cents. But if you win, I'm going to give you, say, a dollar, okay? A dollar, okay, guys? That's pretty damn good, wouldn't you think? So now your risk to reward is pretty damn good. Instead of it being, say, 50 to 50 cents, which is 1-to-1, it's now a dollar to 50 cents, which is 2-to-1. Is that making sense to you guys? I hope that makes sense to you guys what risk to reward is. And that is what we are doing here exactly in trading every single day. We go through probabilities and we look for high probability setups. And this, my friends, you guys have missed it already because it's already at 764. But this, my friends, is a very fucking good setup. Worst case scenario, once again, is that it forms a triple Elliot Wave combo, like correction, and I sell it at, sure, whatever, 780 or something. Even if it was over here, it went to 780, like I'd be happy. It's a 1-to-1 risk to reward. But here, you're also risking potentially to get a 20% gain, guys. So just in a round number, if I put in $1,000, I get a chance to win 20% of that, right? I can make $200. But if I put in $1,000 and it only hits maybe right here, I'm gonna make about 4%, okay? Which is, $40. So I'm pretty happy with it still, no matter what. I really hope that this is starting to work out. I really understand, because I wanted to make a video. I've been talking about risk management and just to reward and just targets in general, right? But we're not really, we're talking a lot about trend lines as well, but we're not talking about the most important things, which is risks to reward and just managing this shit and finding high probability trades. I mean, if it went to here and it flew through it, heck, I'd be making 35%. Based on history, might even have a chance to hit up here, but not for a while. But what we do know is that wave 3 is always stronger than wave 1. No matter what, it's the strongest one. There's rarely a chance where wave 3 is weak. So we combine it with all this hype and all this news coming up right now. Is there a good chance, guys, for it to hit this target? Maybe the WXY correction finished, right? If it did finish, with certainty it'll hit this target, guys, tomorrow. I am pretty confident if it doesn't correct a little bit further, and assuming the news does not come out, or sorry, if it does not correct further and news does come out, no doubt in my mind, we're gonna freaking hit $9 tomorrow just based on a 1-to-1 ratio. If this can do it right here, just based on all the hype, this trend right here, guys, it was the hype from John releasing that blog, everyone bought into it, and it went up this much. If it went up the same amount, okay, now we'll think of this. Let's assume that good news comes tomorrow. Wallet SDK is available for developers. Exchange is up, they're testing it already on different platforms. Amazing roadmap as well. If this only went up this much based on hype, and the news was released, and all things pointed to positivity, do you guys really think that this wave would be equivalent in strength to the hype wave? Hell no. It's going to be way stronger than the hype wave, and it's probably going to get even up to here, to $10. Does that make sense? Right? So we have to rationalize it that way as well. So this is a really good trade. Like I only took one tiny trade, and it was from here earlier, just a few hours ago, if you guys remember. Actually, it might have been from, I can't remember. I already closed it though. From here, I took it around here, and I closed it right there. It's on my Twitter. You guys can find it. Do you guys see what I mean? I really hope that it makes sense. If it doesn't make sense for you guys, give me a shout, give me a direct message on Twitter, and we're gonna walk through it, okay? So this is how double bottoms can happen, guys. Like here's one bottom. If we look on a higher time frame, of course it looks different, right? So here's one bottom, and that had been a second bottom already, or this could have been counted as one bottom, and that's a second bottom there. But either way, Wonderful setup, wonderful setup. And we also look at the daily chart, right, to just get an idea of other factors. Take a look at this right here. It's definitely diverging, right? The one when the daily chart MACD crosses over, it's a pretty damn powerful thing. So quick recap. This is wave 1 that finished already. This is your A, B, C, D, and E correction right here, right? And now we are deciding one of two things, which is 1, are we going to have a triple Elliot wave combo correction to make 11 waves in the whole structure, 11 subwaves in the whole structure? Or are we just going to have a 7-wave substructure, which is A, B, C, W, X, Y? If that is the case, it will go up to here, one of these 3 boxes, assuming positive news comes out. If there's no really good news coming out, which I can't really foresee because the developers are fucking sexy as hell. Those mofos, man, they got their shit together, guys. So anyways, but if news wasn't positive, then we're gonna expect another wave correction, right? Like I mentioned. So we've pretty much outlined every single possible case, haven't we? Right? It's not just gonna tank all of a sudden. We already got a double bottom. Like, come on, guys. Let's use some common sense here. You guys think it's gonna break this double bottom and basically 3 major key areas very soon? No, it's not gonna happen. It already broke out of this resistance area from the daily chart. Remember this huge resistance area? Connecting points B, D, and even the first one up there. It's hovering right above the resistance, and there's another major support here. And there's good news coming out. So yeah, like we've gone through every single possible scenario. There's no doubt in my mind that it's gonna at least go somewhere, you know, between $7.75 and $8, right? Somewhere between point B right here and point X right here, which is about $7.75 to $8. Will it go higher though? It really depends on the news, guys. It really depends on them. So there you guys have it. That is my Elliot Wave analysis for OmiseGo. Okay, and this is just a short-term analysis that I wanted to give you guys a quick play-by-play on for everything that has happened from the beginning. I hope you enjoyed it. For those that are new to my YouTube channel, check me out, guys. Just watch out some of my videos. Maybe follow me on Twitter. I post some pretty fun stuff that has lots of technical analysis. I love technical analysis for the people that do follow me. And I wanted to thank all you guys for the support and love that you've given me over the past few months. It's been really nice talking to people and meeting a bunch of different people as well. And I hope that we've all learned something together, because I know I certainly have. So have yourselves a great day, guys, and we will talk to each other soon. Bye now.